PreMarket, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily technical market analysis show, where we look at what happened in the market during the day and how we can plan for a better trade for the next day. So we had a red day today, a pullback after previous big rally that happened, where 15% of move from the dip happened, right? So let's get into and see what exactly happened in markets today. And as usual, the pre-market analysis for the April 7th Thursday. It's an expiry day, weekly. And our analysis will be based on all the parameters that you see on the left side, and as well as the data analysis on the right side. I would have some actionables and look at the global markets as well to get some cues. Okay, so the index is Nifty. Index is what you see here. It had a pullback, right? It had around 2% of pullback that has happened from yesterday and today after the big gap up rally, and now it seems to have taken a support at a previous resistance. So this could be a change in polarity. Same with BANKNIFTY, big bullish candles, breakout, gap up, big gap up, and now it has taken that gap as this kind of support, and now there is a change in polarity that is possible. But it is a 2 days of pullback that has happened, retracement after big moves. It's quite natural. But the pullback today was kind of, it looks like it does not want to give up that support zone, right? It was hovering around the 17,800 zones and 37, 600, 500 kind of. It's not ready to give up that zone. It's taking that as a support, that gap between these two green candles as a support, and then it's hovering around that. That implicates, the profit bookings, and then it's nothing. Pullback is nothing but a profit booking, right? So it's not a sell-off that has happened. Pullback, right? Profits are booked, and now the price will go back. Bounce up is what we have to assume until the gap is again filled on the downside, right? So let's look at the numbers. It's like 150 points gone today, 0.83, less than 1% gone in Nifty, right? And a small bearish candle is formed, and it still could not climb over the 18K today, but it's still Nifty is still comfortably above all the moving averages, 50, 200, 20, 200, 100, whatever, right? Fibonacci 61 level also is there, and gap support downside also can be clearly seen, right? So price action overall, if you see, it's a trend line breakout. Trend line channel is breakout has happened on both indices. It's a flag breakout. You can see that flag pattern around here. On the Bank Nifty also, you can see the flag here. The flag is broken out with a multiple bearish bullish candle and some profit booking pullback that has happened, right? Fibonacci 61 is there, gap support, all these things are comfortably still there. Bank Nifty also, it has slipped from the Fibonacci 61 level from the Bank Nifty, but it has not given up the gap support. 200 EMA, everything is intact there, right? Not much worry as of now. Bank Nifty also have the trend line breakout that has happened. You see the intraday, it is it's a pullback. It's a gap up. See the intraday price action, right? It's a gap down, then a range bound move, gap down and a range bound Bank Nifty also, right? So that range is 100 and 300 kind of points on both. Bollinger Bands are showing that there is high volatility. The bias is towards the bullish side because it's above the 200 EMA and also walking over the bands, right? All the way pull down has happened. So that moving up upper band is slightly bent, but it's volatile, bullish bias or slight consolidation is what the Bollinger Bands are indicating on both the indices. Same here also, right? Small bend on the upper band has happened, but still the price is very close to the upper band, walking very close to the bands, right? Say volatility is high, right? You had multiple V-shape today also. Some kind of V-shape will happen. See, it went down, then moved up, and then went down. So it's very volatile, right? Even though it's below 20, still the market is very volatile. That's what Bollinger Bands are indicating. The width between the median and the upper bands and lower bands are high. Support resistance levels is right. Immediate support against 17,800, 850 is the support, right? If it breaks from there, then support is 17,500, 7,600 is natural retracement level. Below that 17,350, 17,400. Below that 17,200, 300, and then 17,000 rounding number. It's a gap support which is still not broken, right? Solid support is here at the 17,000 level. On the upside, 17,800, if that is maintained, then you have 18,000 that has to be caught back again. Then 1800 and 18,200 and 18,400. That's how it's on the upside. Bank Nifty, similarly, it has resistance on the upside. It's 18,350, 38, 350, 38,500 that levels, from where it is slipped down. And 38,000, nearby 38,000 and 38,500. Both are major resistance zones before it can move further up, right? Downside you had 37,700, 37,800 sub resistance also there, that is also broken today. And then 37,500 Fibonacci 23 is the support zone. So if that is broken, then it has got the gap which was broken earlier 2 days back, and now that could act as support. That's in 37,000 level, 36,900, 3,700 level. So if that is broken, then you come back to the 37,000 nearby levels, which is Fibonacci 38 retracement level. Below that you have 36,000 levels, and below that so you don't need to go that far, right? So that's the resistances, supports, and the resistance upside. 39,000 will be the next hurdle after the 38,500 is cleared, right? Then above that you have 39,500 and 40,000 like that on the upside. And that's Bank Nifty support resistance levels and Nifty support resistance levels, right? Making out of these levels. Coming to the momentum is bullish on the sideways, we know that. But today we have Bank Nifty that has slightly slipped below the 60. That's okay. Like you don't need to be precisely 60 itself. You don't need to that. But it looks like there may be a range shift from the sideways zone into the bullish zone that has come, because momentum has shifted the gear. That is what range shift, right? Shifted the gear from sideways and clearly taken the support near the bullish zones, and then now there is if the change in polarity works out, it could be a upward momentum. So what is okay, kind of bullish, almost near bullish in short term on the Bank Nifty also, but medium term it is not at bullish, it remains sideways, right? But it is in the rising mode, towards heading towards the bullish zones on the medium term as well. No divergence seen as of now. Trend lines, trend indicators, ADX is and DMI is indicating in the positive zone, so it's bullish on the short term for Nifty and the Bank Nifty, and it is rising strength, rising bullishness, what he said. But medium term, it is also it has crossed to the bullish zones, right? For both the indices, but the strength is not great yet, right? So trend is positive, trend is bullish, both the indices, short and medium term. Volatility a little more short, a little more further up at 3%, so settle at 19. Coming closer to the 20, you have to be careful. 18.29 is what implied volatility. Implied volatility percentage is 70%. Cool off has happened, but higher than yesterday's. So it is getting very close. 19 is very close to 20, so you still have to be careful that it is not getting back to that. Open interest analysis showing tomorrow is weekly first expiry of April, and you can see that the put unwinding has happened here in both indices. So the open interest as such is showing some kind of bearishness. That's indicative of the charts. But at its levels, what indicates it 17,500 and 18,000 is where pullbacks could go up to 17,500, and the breakout could close only near to 18,000. May not be beyond that, is what tomorrow's expiry open interest options data is indicating. 0.6 is not bullish enough, right? Long unwinding on the futures open interest data is showing it is kind of bearish. Long unwinding, people who are long now thinking of shorting. Bank Nifty 36,000 and 39,000 is the range where the highest put and call rating is there. 37,500 and 38,000 is the next level of put and call rating is there. 0.76 is not bullish enough yet. It's not that bullish. And long unwinding is kind of bearish on the futures open interest data. That's what the slight bearishness is there in the open interest charts and futures OI build up. And the range levels are also 500 points apart between 7,500 and 18,000, and it's not showing any big bullish moves tomorrow. Yes, red HDFC twins, which had made this big move, right, has probably got into the selling mode, and that was the reason for the performers are status steel, SBI, and few stocks, right? So financial services did good, metals also did good, energy also did good. What didn't do good was IT, FMCG, automobile, pharma, right? So banks, financials, and metals did well. Let's look at the index heavyweights. Look at the HDFC. It's gone into the bullish momentum, right? Big up move, breakout, of multiple resistance at one shot, big moves, and it is kind of profit booking and settling. The momentum it's cooling down. Cool off period is what is happening. What is happening on HDFC. Also, with the merged, to be merged entity also, some cool off profit booking, people coming out of it and all that is happening, but it's a big breakout, big momentum, big trend, everything is there. Index heavyweight HDFC, although it is a red close, reason for the red close is after the big move. Lions also closed green today, so it is also having very good bullish momentum, and it does also have had a breakout from the cup and handle kind of pattern, and it's a green close. It was consolidating the last 2 days, right? In fees also consolidation very close to the all-time high. Momentum is slipped from the bullish to the sideways zones. This is also a red close with a momentum slipping to the sideways and still within the channel, right? With slow momentum, right? HSBC Bank had taken out the resistance and then consolidating, but it could not climb into the bullish zone. It is kind of resisting below the RSI 60. And Kodak Bank is also closed, right? Seems like that resistance when it was trying to break out yesterday has pushed it down for the second day yesterday and today. Bullish move day for yesterday, is finding it difficult to sustain there. So momentum still could not climb to bullish zones yet. Even after day for yesterday's moves, it's still in the sideways, and now it is resisting below the RSI 60. So there is some selling pressure there in the Kodak Bank. So overall, if you look at HDFC banks, HDFC twins, right, have closed at because of the profit booking selling pressure after the big move, but momentum is bullish for both. Clients doing good, and IT stocks are like consolidating, and ICICI is trying to consolidate and keep the ICICI and Kodak Bank both have resistance, below the bullish zones, right? And while it is attempting to move into the bullish zones, it is facing resistance. IT sector-wise performance, if you see, IT is down. Metal is only sector that is up because auto flat close, autos sector close flat, pharma close flat, FMCG close flat, realty close flat, all flat. Metal bullish 1.3% up, IT down 1.63. So metal is only stock that's bullish in short term as well as medium term. So you could take confident positions on that sector. While pharma is bullish and FMCG and realty also is bullish on the short term, right? Not on the medium term. So if you want, you can take but tight stop losses, right? So 4 sectors are bullish, including metal, pharma, FMCG, and realty. Auto is still in the sideways. IT also still sideways near the all-time high levels, right? Look at the data today. Fyers have turned to sellers, which is not good, but some support is coming from the DIA. So Fyers had been buying for the last 4 days. Now they seems to be going back into selling mode today. Which is not good, not encouraging. US dollar, if you look at the right side, dollar index has hit and crossed the resistance of the 99.6 and then hovering around that resistance zone. So if it is able to take out that above, then it's not good. Momentum from the sideways has climbed to the bullish zone, so trend is also bullish. So overall, dollar index is heading north. For left side, what you see is USD INR currency that also has shot up, and then whatever cool off that has happened since last several weeks has now ended up, and now it has taken a bounce from the support zone and seems like it wants to head higher, right? You can see that the bounce has happened from the support of the RSI and the 40 levels also. So rupee has weakened, basically not good too. Global markets, if you look, Dow Jones closing red with momentum slipping to sideways, trend is bearish. So Nasdaq also showing a red candle, and S&P 500 also showing red with momentum slipping the sideways. So some selling pressure, some shakiness that is seen in the US markets, where we cautious of this and watch it carefully before the pre-market on the next day morning after tonight's trading, basically. Crude oil also seems to be consolidating, but it is shot up again back to the 100 above level. It's not good, but momentum is sideways. That's only a good thing that you can see. Gold is consolidating at that support zone after this false breakout that has happened earlier. Its momentum is very slow. It's in the sideways, so it may take its own time before it attempts to take out the all-time high once again, right? Actionables to India Hotels is doing a breakout from the rounding pattern, double rounding pattern. Look at the volumes, bullish volumes. Look at this. There must be some divergence here, which is probably the target also is met. So bullish momentum above the average of the RSI, and trend also is clearly bullish and rising ADX and breaking out pattern. Clear, solid, opening the low bullish candle after very long consolidation is what you see. So this could give a long ride for a swing or a push in both. Which Tata Group stock, Indian Hotels. But the Airtel also on the weekly charts is what you see. Trade has taken on a daily, but Mount is bullish on even the medium term, and it is a box or a rectangle pattern breakout. And if this weekly candle closes green at the end of Friday, then that could give a good breakout with a target equal to the size of this box, right? So that's Airtel and India hodls, both long calls for the next few days. Actionables, right? So wrap up, mild bullishness still there for short term. That's what the chart pattern, support levels, momentum bullishness, and trend. Bollinger Bands, all that is saying. So 15-20% of market recovery has happened in the last 3 weeks, and good supports are seen. 200 DMA, 220, all these things are the downside. Gap supports are also there for Nifty. So overall is good, but I was saying going back to the selling mode is concerned. That's what happened today. And rising crude, dollar, global cues are not very encouraging from the Fed interest rate hike or global war news, Ukraine, Russia crisis, all that news is still hovering around. It's not fully died, right? So 17,500 and 37,500, if it remains, you can say it may be breaking out at some point in time. But if that is not sustained, then it will create another medium-term lower means lower high. Pattern may continue, and then we may have maybe going back from where we came. But reasonable 15% recovery after is considerably good, and then it should sustain. But at least some consolidation may happen for some time, and then by the time the news, negative news moves out and results and all that comes in for the next quarter, then it may again move up. But war and peace talks are still happening, and then anytime any overnight questions, whoever has it has to still be cautious, right, on being very long, very bullish on the market, right. But LG is still very close to the 20 plus, and Fyers still going to the, they must have stopped or paused it for a few days, but again going to the selling mode, right? Today it's not very positive. So 15% recovery is the strength, in the mid of all the uncertainty, it just corrected near to 20% and then retraced beautifully in few weeks time, right? So it's cooling off below 20, remaining is good for the trading on the options derivative instruments, but you have to be cautious. Overnight positions has to be hedged with risk mind strategies like non-directional strategies or counter spreads, vertical spreads, etc. Intraday volatility is still there, so be cautious on the position sizing in the candlestick trading, right? So that's a mild bullish view for the next day. So hope this helps you to frame your view and your trade plan for the next day. If you think this helps, please hit the like button, leave your feedback, share it to maximum. We have very few subscriptions, so even if you are subscribed, share it to others, and if you're not subscribed, subscribe right away. Thanks for watching. Happy trading, happy learning. Bye.